Our guest host this morning on Squawk, Wilbur Ross. He is the chairman and CEO of WL Ross. We've been talking all morning about the markets, things that have been happening here. Also, let's get straight to our task force this morning because we do have more to talk about. Of course, this morning we brought Chicago right here to our headquarters today. And here on set with us this morning, we've got Kevin Ferry of Cronus Futures Management. Also, our very own Rick Santelli. Steve Leisman is here as well, trying to moderate things and keep a little bit of energy going through on. Not that anybody else needs it around here, but also from the CME Group today. We've got independent trader Eric Wilkinson. Yeah.
I should.
You know him better as the Wolfman, and I think he can't hear us just yet. He's up on screen right now, but we'll check in with him in just a minute. Rick, you're up here on set today. What stuff are you watching as we head through?
Well, I'm trying to generically keep an eye on the dollar because I think that's key. And, of course, any of the lingering credit issues, the conversation with Charlie was great, hearing what's going on with the auction rate securities, because I look at things from a simple standpoint. I think that the credit crisis started first and radiated out all the negative effects that have rippled and slowed the economy and hurt the consumer. So if you really want global economic horsepower to return, or more specifically our own backyard's economy to return, you have to fix the credit issues. I mean, they're tied together, and I think that we lose sight of the cause effect here.
You know, Rick, if you say that, which I'm not disagreeing with, the extension of that is that we ain't seen nothing yet when it comes to the trouble coming our way, because it doesn't seem like when you look at the aggregates that are out there, there has been a huge macro effect from tight credit yet. There is a story in the Financial Times today that is extremely worrisome. It has to do with the amount of credit that has to be refinanced by just the banks. Forget their customers. The banks themselves have a world of refinancing to do, Wilbur Ross, and then they got to refinance their customers. So it looks like, picking up on what Rick said, the fundamental outlook from that is that there's still a big hit to the economy coming from the credit crunch.
Oh, I think there is. My guess is that something like 1,000 banks will fail before we get through with this process. Yeah, well, remember,
the average. The average is low right now.
Yeah, remember in the early 90s when we had the S&L crisis, something like 2,600 banks failed. Right. Not great big ones necessarily, but 1,000 banks is going to be a lot.
You know it's bad when I sound like the optimist, but I'll tell you, I would say that the bright side of this is the markets that you're talking about are functioning, as opposed to some of the other markets that Mr. Ross and I were that are still in complete disarray. It starts there. If they can refinance, if they can recapitalize, this is easy economics. You need a steep yield curve and some time, and they will recapitalize themselves, and then you'll get to stage two. But stage one is worse than people thought.
For better or worse, I've kind of characterized what we have happening right now as a kind of battle between the lagged effects of monetary policy, 300 basis points of cut working through the economy, and the lagged effects of tighter credit, which is this real downturn in the availability of credit. And it doesn't seem to have, so far, given you've had the rebate checks well-timed from Washington, hit the economy, Wilbur. But at the same time, you have that going away. And we talked about this earlier. The third quarter and fourth quarter estimates from the economists are not terrific. In fact, they're looking like it will be the hit we've been waiting for.
Well, remember, each $1 of bank equity that gets lost takes out about $12 or $13 of loans. So there's a tremendous magnifier effect of small changes in bank equity.
And plus you have this thing which I call IBVE, involuntary balance sheet expansion. When they take on the ARS onto the balance sheet, that is less lending into the real economy that was going to be out there. If there's a surprise, if there's one thing to talk about, I am intrigued by this idea from my colleague Larry Kudlow, which is the idea that lower oil prices can help fix a lot of the problems that are out there in the economy. Rick?
Oh, I think that's great. Let's have one of the craziest commodity markets in history be our savior. Okay, let's move on.
Is there a note of sarcasm in there? I'm just throwing out the idea.
All right, Wolfman, tell me something real, buddy.
What do you got? It looks like the euro's actually starting to rally against the dollar again. It's at 147.22. So is the yen, and it's at 110.29.
So, Eric, let's keep this simple. If the dollar stays in this zone, and we look at the Fed futures contract, there's a little slippage there, but probably no Fed activity for the rest of the year. What do you think this is going to do to the yield curve right now? Are we going to see over 450 in a 30-year bond? Are we going to see 250 back in a 2-year note? Are we looking at interest rates just waffling for the next several months lower? What's your guess?
Well, I think the interest rates are definitely going to start trickling a little bit lower, especially with the credit crunch coming from Europe right now. Everybody's starting to see that. So you're really, this August, if you went chart by chart, day by day, you would almost probably see the same thing that happened last year with the euro against the Fed funds here. We're almost at 100 basis points separation, which is...
And that's Kevin Ferry's territory. We're just talking about the euro, the LIBOR versus Fed funds.
See if you can fix that,
Eric.
I would not hedge my Fed funds with the euros right now unless I was going to go short euros and long Fed funds for sure.
Hey, Wolfman, it's good to talk to you today.
Hey, it's good to hear from you, too.
Well, it's really good to actually get to talk to you and have you hear back instead of always using the interpreter.
Yeah, it's actually a lot nicer to be able to hear everybody talking rather than just getting the question point blank right there.
You mean getting Rick's biased side of what the argument is, Eric, right?
Well, you heard me last time. If the writing's on the wall, you just got to read it, It's not whether I agree with Rick all the time or not, but as of right now, the steepening yield curve is what's happening, and that's kind of what I'm looking at day by day.
We've been there, done that, Eric. A lot of these Fed outlooks can certainly change the complexion quickly. Thanks, buddy. Make some dough trade.
Eric, can you just howl for us? Can you actually howl for us?
I don't actually howl, but whoever was doing that earlier did a pretty good imitation of when I try to scare my kids.
Hey, that was... Hey, there you go.
There you go.
Wolfman, thank you for joining us. It's great to talk to you.
Thank you very much.